Cafe on ET Now with me, Somit Sarkar, and my co-anchor Vinny Motiwala. Let's go straight across to what has the US market did overnight, Vinny.
Absolutely. And firstly, good morning to you and a happy Friday. Yes, we are excited for the weekend, but the markets don't seem to be excited because the global handover that we're getting in. US market saw a sharp fall coming in, down, ended and was down almost 750 points. And obviously, that was the worst day that Dow booked in almost 3 months coming in. Obviously, the fears of recession were increasing. Now, yes, this week we had seen a Federal Reserve rate hikes. They said that, furthermore, also there could be rate hike coming in. And yesterday, we saw that European Central Bank also gave a warning on more pain points, rate hikes coming in over there as well. So, obviously, after that, we saw that the US markets also actually saw a fall coming in. Stocks started seeing a sharp drop, while dollar started seeing a rally coming in as well. S&P 500 fell more than 2 points, closing at the lowest levels in more than a month. Tech-heavy Nasdaq 100 also saw losses exceeding almost 3% in trade as well. Sharp fall coming in for Nasdaq as well. In other terms, S&P 500, we saw that S&P 500 also closed weak, was down almost 2.5% in trade as well. So sharp sell-off that we've seen coming in on the street on the back of recession fears. Keeping an eye on that, Bank of England as well as the European Central Bank further indicated extending hike cycle last evening as well. Most major central banks have followed the rate hike strategy, and especially in an attempt to actually control some bit of an inflation coming in over there. Now, when you look at the European markets also, obviously they do close before the US markets, but that too have obviously closed in the red, given that what we've seen coming in terms of rate hikes. DAX closed down almost 3% in trade, more than 3% in trade. FTSE down almost 1% in trade, while the CAC also is down as much as 3% in trade. So yes, all we've seen is a sell-off coming in the global markets. When you look at the Dow futures, as of now, let's just have a look at that. Seems like they're trading almost flattish as investors are actually looking and keeping a close eye on what is going to be happening in terms of the recession fears, as well as SGX Nifty indicating a bit of a negative to muted start is what we could say for the Indian markets as well. Somit.
Well, as you mentioned, because of this rate hike cycle that all the central banks globally have been taking, and they have also said that the rate hike cycle would be extended, we have seen a decline in the crude oil prices overnight. Now, Brent crude is currently trading around the $81 per barrel mark from $83 that we had seen yesterday, and the major reason is the rate hikes taken globally and the extended rate hike cycle. And there's also one more reason, and that is the fact that the Keystone pipeline has been partially restarted, thereby assuring that flows of crude will be much normal or better than what it was expected earlier. And because of this reason, we have seen a bit of slide when it comes to the Brent crude prices. When it comes to the Singapore gross refining margin, that is the Asian benchmark for the oil marketing companies and the oil refining companies, that has surged higher and is now trading around $10.1 per barrel mark, which is $1 higher than what it was doing the previous day. Now, this is on the back of a rally that we have seen in product cracks. All product cracks have rallied yesterday, except for LPG, which was down on a day-to-day basis. When it comes to gas prices, European gas prices on colder weather forecast have inched up higher. Similarly, a Henry Hub, which is the benchmark for the US market, has also inched up higher on lower output and higher exports that we had seen in the country, and on the back of the fact that globally gas prices are going up, plus Chinese economy has opened up. The Japan-Korea market, we have seen a sudden uptrend in this on trade. Currently they are trading around $39 per MMBTU. Yesterday it was trading close to $33. This is on the back of the rising global gas prices and the fact that the Chinese economy has opened up.
Absolutely, but Somit, we have a line of events also coming in today as well. In the US markets globally, we'll be watching out for the industrial production data as well as the initial jobless claims data coming in the US. While obviously Accenture earnings, they're the one to watch out for as well, because they do indicate in terms of how IT earnings actually shape up even in the Indian markets as well. So keep an eye out on Accenture earnings coming in as well. Now, on the domestic front, we'll be watching out for the BSE Sensex 7 semi-annual reject coming in as well. Other than that, Garware Technical Fibers buyback tender offer is set to close, and IRCTC's OFS for retail is going to be opening today. So that is the one we're watching out for. IRCTC already fell 6% yesterday in trade, so keep an eye out on that one. And lock-in opens for Ark Chemical Industry, so that is a factor to watch out for as well. Those are the top events that we're keeping an eye out on today, Somit.
Definitely, Vinny. Of that, if you see the Sensex reject today is just the adjustment date. The effective date of this change will be December 19. So today you could see some flows and some movement in the share prices. Also, when it comes to Accenture results, they will be declared today post-market. Now, moving on, globally, if you see the European Central Bank has raised interest rates for the fourth time in a row. Now, the hike, though, has been smaller this time, but the bank says it will further hike rates to reduce cash from the financial system. Now, the ECB has been raising rates at an unprecedented pace already. Now, the latest hike of 50 basis points was expected, and at the same time, the Bank of England has also raised its key interest rate to around 3.5% from 3%. Now, this is the ninth time in a row that the rate has been hiked. The Monetary Policy Committee voted 6-3 in favor of the move, with more rate hikes expected in the weeks to come. Now, the two back-to-back rate hikes come a day after the US Fed raised its rate by another 50 basis points. Now, what do these moves mean for investors in 2020? Well, and staying with the stories from across the globe, Geeta Gopinath of the International Monetary Fund thinks that the European region should brace for tougher times going into the next year, and the European region will be more negatively impacted due to the Russian-Ukraine war.
Europe, because of them being more directly impacted by Russia's invasion of Ukraine and the consequences on gas prices, yes, they are much more negatively impacted. We've seen, for instance, a bit of a divergence in how retail sales are looking in the US relative to Europe. US is strong. The more recent data that came in for Europe is much weaker, in line with our projection that we will have about half of Euro area countries that have negative growth in the fourth quarter. So it is a tougher time for them.
Okay. And China raced to vaccinate its most vulnerable people in anticipation of waves of COVID-19 infection. Some analysts also expected the death toll to soar after it eased strict controls that had kept the pandemic at bay for 3 years. The World Health Organization also raised concerns about inadequate vaccination.
Well, the US accounting watchdog said it has full access to inspect and investigate firms in China for the first time ever. Now, this removed the risk that around 200 Chinese companies could be kicked off the US stock exchanges. This spells out a relief for the Chinese firms facing delisting, including Alibaba.
And consumers pulled back on spending in November, according to the Commerce Department data. Retail sales for the month declined by 0.6%, the most in nearly a year. 9 of 13 categories fell, including autos and furniture.
Western allies have stepped up their support of Ukraine with additional funding. Now, Moscow has expanded military training, while the defense minister predicted a new Russian offensive. With Russia's invasion in its 10th month, European Union leaders agreed to provide 10 billion euros in financing to Ukraine next year.
And Tesla CEO Elon Musk has sold another 22 million shares worth $3.58 billion in the electric car maker Tesla. The shares were sold on 3 days this week, according to the filing with the US financial regulator. It brings the total of Tesla stock sold by Elon Musk over the past year to almost $40 billion.
Also, thousands of people rallied in Turkey to oppose the conviction and political ban of Istanbul mayor. Now, a Turkish court sentenced him to 2 years and 7 months in prison. People also criticized the president and his ruling AK party before elections next year.
And Sumit, let's not forget, finally after 2 years of the pandemic, we are actually seeing that travel is coming back, and seems like people are looking to make up for the missed vacations that we've had. Surely I am going for one as well. So the long queues at the airports are a concern that we're seeing coming in. Plus, the price of flights also have seen an increase coming in as well. Now, tickets during the holiday season and booked out hotel inventory suggest that the revenge travel is back. Let's go across and listen into some of the experts, what they are saying in terms of what's driving the demand, what are the latest trends they're seeing on this travel side, tourism side as well.
We are also on the airtrip side signing up more alternate accommodation properties. And even on the business destinations, we are seeing a strong uptake. So the numbers are pretty much, so on the hotel side, it hasn't hit the pre-pandemic levels, but we are roughly about 80 to 90% of it. But on the air side, we have touched the pre-pandemic level for domestic.
Few trends, however, and I must tell you that this year particularly, we are seeing people consciously stay away from the ultra buzzed places, right? Buzzing places, because I think people who come to us are looking for privacy and the noise value of New Year's and the Christmas. They just want to escape all of that. That has persisted. No change whatsoever.
So largely what we are looking at is a jump in overall turnover of bookings for hotels as well as flights, and what has resulted is largely, as you rightly said, corporate travel is and largely every travel segment is on a boom right now. VFR is on a very high numbers, even religious travel and wedding travel, right? So yes, airports are full, of course, with all of this travel. And hotels also have seen a significant jump both in terms of occupancy as well as in terms of pricing. At our end, what we have seen is at least a 15 to 30% jump in terms of pricing for the coming season, the long weekend and the Christmas New Year period. And largely, yes, that's and overall occupancy levels for the hotels also stay at a very fairly high level of 70 to 80% currently.
With that, let's jump into a short break. We'll have much more news on the domestic side on the other side.
Welcome back, and you're watching Market Cafe on ET Now. And obviously we were talking about the chaos that we've seen coming in at airports as well. That has got the authorities a bit in a tizzy as well. Now the Union Home Secretary yesterday chaired a high-level meeting to take stock of the situation. ET now learns that of the 12-point action plan put in place, 6 have been actually implemented so far, and that the issue of manpower shortage will be looked into as well. There's a report my colleague filed on this, and Sameer Dikshit is here with that report.
The Union Home Secretary today chaired an important meeting on the issue of congestion at Delhi Airport that caused inconvenience to the passengers with the stakeholders like Secretary, Civil Aviation Ministry, the security agency like BCAS, CISF and several other stakeholders. Sources have informed that the Civil Aviation Ministry presented a 12-point action plan that has been put in use to ease the congestion, and of this 6 points have already been implemented, like the security personnel. They have been increased. The X-ray machine has been increased from 11 to 17. Gradually it will be taken to 20. Also the digital display board have been installed at the entry gate of the airports to give the right information to the passengers. So this sort of plan that has been put in use. Additionally, the flights will be reduced at peak hours at Terminal 3 airport. So this sort of action plan was discussed in the meeting, but we are also getting to know from our sources that the manpower is a major challenge. The security personnel deployment is a major challenge that was discussed. The Home Affairs Ministry has assured the Civil Aviation Ministry and several others that this will be taken into account and will be properly addressed. Additional deployment of forces will be there in coming days. So that was an important issue that was discussed. In addition, the center has given a clear message that whatever chaos has happened at Delhi airport, it should not be done at other airports, especially the important airport like Hyderabad, Bengaluru or Mumbai airport. So the action plan which has been put in place for Delhi airport, it should be replicated to these other important airport as well. So that was the important meeting that was chaired by the Union Home Secretary, and a clear message from the center is that the agencies should take proper responsibility, that no inconvenience should be caused to the passengers, and the growth of aviation sector should continue.
Well, a group of ministers on online gaming, casino and horse racing submits a report to the GST Council, but yet again fails to find common grounds. Now, UP and West Bengal want to value games of chances and skills differently, but few other states like Goa, Tamil Nadu and are on board with the 28% GST on gross revenue. Prakash Priyadarshi, who has filed this report, gives us more details on the same.
See, GOM on online gaming, horse racing and casino has finally submitted its report to the GST Council, but with diverse view. Convener of GOM, Karnat Sangma, has said after submitting report that they could not build consensus among members on certain issue, and one of them is valuation structure as to how GST should be calculated on these services, whether it should be based on betting value or on gross revenue. However, there was consensus on GST structure that, GOM members are agree on 28% GST on all these three services like online gaming, horse racing and casino. However, GOM had taken a view of industry player before submitting a report, but they could not build consensus among members. We also given to understand that GOM members like UP and West Bengal want to differentiate valuation based on a category of games like a game of chance and a game of skill. GOM members like Goa, Tamil Nadu, Meghalaya, Gujarat and Maharashtra agree on valuation structure. These states agree with 28% GST on gross revenue. But there is no consensus among the members on valuation structure, and with diverse view, GOM has submitted report to the GST Council. As you are aware, the GST Council is going to meet on 17th December, and Council may discuss this report.
Okay. And the holiday season is here, and so are the festivities that come with it. On this week, ET Now recommends Ankita Saxena joins us with a list of cultural festivals to keep on your radar.
It's the season to be jolly. Yes, winters are here, and so is the season of festivities and holidays. Now, with revenge travel back with a vengeance, ET Now has decided to curate a list of one of the most awaited cultural events from across the country that you could be visiting. So here goes the list. First up is the Ranotsav of Kutch. Organized between October to February, Ranotsav offers the best time in a carnival of music, dance and amazing cultural exposure, and visiting the Ran on the full moon day is an absolute must for every traveller. Second up is the Manali Winter Carnival, starting from the 2nd of January to the 6th of January. For many years, the carnival has been appealing to the locals and travellers with various rides, clothing stalls, a carnival parade and the most awaited Winter Queen contest. The fest also has a craft bazaar which should not be missed. Third is the Jaisalmer Desert Festival. Organized every year in February, it is an annual event that is celebrated 3 days ahead of the full moon day. From the folk tunes on the dunes of the Thar Desert to a great extravagant cultural affair, the festival is a delight for the locals and the travellers. Well, what are you waiting for? Get your packages booked already to experience this cultural extravaganza this holiday season. Now, moving on from travel to movies, for all you cinephiles, there is a big movie release this week. Yes, it is Avatar, The Way of Water is set to hit the theatres on the 16th of December. Written, directed and co-produced by James Cameron, this is the second edition of the much-loved Avatar that released in 2009. Now, in the events to watch out for, India's one of the finest art and design show hosted by Architectural Design is now in Mumbai. You can attend the third edition of AD Design Show at Geo World Center, BKC, Mumbai from 16th to 18th of December. And for all you book lovers, the author of the bestseller, The Monk Who Sold His Ferrari, Robin Sharma is set to address the Indian audience at the first edition of the Indian Wealth Summit to be held on the 17th of December at Geo Convention Center at BKC. Well, that's it for this week's ET Now Recommends. We'll be back next week with some more recommendations only for you.
With that, let's slip into a short break and we'll be back with more news on the other side.
Welcome back, and you're watching Market Cafe on ET Now. Let's have a look at what the Asian markets are doing and how they've opened up as well. Obviously, we had a weak handover coming in from the global markets. Asian markets too have opened up in the red as well. Whether you look at the ASX 200, Nikkei, Kospi, all trading in the red. Nikkei down almost more than 1% in trade coming in as well. We have Hang Seng that is down almost 1% as well, and as well as Shanghai, which is down almost 0.3% in trade. So yes, so weak opening is what is coming in even for the Asian markets. Yes, we spoke about crude oil prices as well, but what is gold doing? Crude did see a jump coming in. Gold, on the other hand, has seen a fall coming in, and gold is again back below that $1,800 per ounce mark. Silver still trading somewhere around the $23 mark as well, and both these are trading in the red this morning as well.
With that, now get in Ashesha, who will be giving us more stock-specific news that will remain in focus in trade today.
Yes, so IRCTC will continue to be in focus in today's trading session. Remember, government is selling its stake in IRCTC. About 2 crore shares have been put on sale via offer for sale, which as a percentage of total equity stands at about 2.5%. Remember, government has the option to sell another additional 2.5%, and this was open for non-retail subscribers yesterday, which subscribed about 1.5 times, and this will be open for retail shareholders today. So on account of this OFS, which is ongoing, IRCTC will continue to be in focus in today's trading session. Moving on to Arca and Chemical Industries, then lock-in for anchor investors will end today. About 7% equity was locked in, and that will those shareholders will be able to sell their shares in the open market, on account of which this stock will also be in focus in today's trading session. Moving on to GMM Pfaudler, then, where sources say that block deal is set to happen today. About 1.3 crore shares, which as a percentage of total equity stands at about 30%, could be traded in a bulk deal that is expected to happen today. Floor price has been fixed as 1700 rupees per share, which is a discount of about 12% to yesterday's closing price. Moving on to SJVN, it will also be in focus, and that is because SJVN Green Energy Limited, a wholly owned subsidiary of the listed entity, has accomplished financial closure of 1000 megawatt solar power project, and the total cost of this project stands at about 5,700 crores. Moving on to IT stocks, then, Accenture will be reporting its numbers later today, so keep an eye out on IT stocks. And lastly, Hindustan Foods will be in focus. Company has executed a business transfer agreement with Reckitt for acquisition of its manufacturing facility. The sale is expected to be completed by the second half of calendar year 23, and the cost of acquisition stands at 156 crores. So on account of this agreement that the company has signed into, Hindustan Foods will also be in focus today.
Okay, Ashesha, thank you so much for the list of stocks that we should be keeping on our radar at 9:15 a.m. But let's go across to Vamakshi, who's standing by to tell us what are the brokerages saying this morning, and what are which sector stocks have they picked out today.
Well, Vinny, absolutely good morning. The brokerages have a lot of financial names on their radar. Now, let's first start off with HDFC Bank. Bank of America has come out with a report, and they believe that the bank is well positioned to deliver ahead of market expectations. The focus has now shifted to execution as well as the synergy coming from the merger. At the current valuations, Bank of America believes that the risk reward is quite attractive, which is why they maintain a buy on this counter given a target price of 1,900 per share. Apart from that, Credit Suisse also has financial stocks on their radar. They believe that larger banks are driving the deposit rate hikes going ahead. PSU banks, however, have a lower loan to deposit ratio and thus have slower deposit rate hikes. FII ownership in PSU banks is also quite low at just about 8 to 10%. So in such a scenario, they continue to prefer larger banks such as SBI, Bank of Baroda, IndusInd Bank and ICICI Bank. Apart from that, Axis Securities also has a few banking names on their radar. They're expecting strong loan growth to come in from 2023, and they're also expecting that consensus earnings should see an upgrade as well. The top picks are IndusInd Bank, Kotak Bank, HDFC Bank and ICICI Bank.
Well, thank you, Amakshi, for all those details. Moving on, stock-specific Deepak Fertilizer. Now, that has announced a demerger of its mining, chemical and the fertilizer business. Now, how will this move help the company? Will it help simplify the structure and the businesses? Let's get in Lisa to get in all those details.
Well, Hi, good morning, everyone. So yes, Deepak Fertilizer and Petrochem, they have announced a corporate restructuring of its business where it will demerge its mining business and its fertilizer business. So the current existing structure goes like this, that both the crop nutrition business and the TAN business, that is the mining chemical business, they both are housed under the same subsidiary, that is Smart Chem Technologies Limited. So the restructuring will be done in two legs of transaction. First leg is that the Mahadan Farm Technology Private Limited, which is a wholly owned subsidiary of STL, that will be amalgamated with STL, and MFTPL will cease to exist, and there will be no consideration for this because it is a subsidiary of STL. And the second leg of transaction will be that the TAN business will be demerged from STL to Deepak Mining Services Private Limited, and for this the exchange ratio will be in 1:1. So post this, the new structure will have two subsidiaries. One will be only STL, which will house the crop nutrition business, and that has 41% of the overall revenue, and the second is Deepak Mining Services, which will house only the mining business, and that will have 32% of revenue. So the restructuring is also subject to NCLT approval, shareholder creditor approval. So the rationale for this is the strategic shift from commodity to specialty to provide for focused leadership, to simplify the structure, and also to unlock growth potential of each of its business vertical. So the street was quite apprehensive of the commoditized nature of the business, and let's look at how the street reacts to this news of the strategic shift of commodities to specialty. Over to you.
Thank you so much for that, Lisa. But let's move on and talk about another stock that is going to be in focus, and that is Just Dial. This is going to be in focus because the company met with a few analysts to share their growth roadmap. They remained quite confident about adding new users as well. But to give us more details on that, let's go across to Mamakshi again to give us those details. Mamakshi?
Well, absolutely, Vinny. Just Dial, well, we have a take coming in from Nuvama. They interacted with the CFO of Just Dial to understand some of the key trends as well as the growth outlook. And let's look at what they've gathered so far. So the company has made impressive recovery in the last 3 quarters, and that is mainly on account of 3 factors. The first one being focus on monthly payment plans, withdrawal of all discounts that the company had given during COVID, as well as price hikes of nearly 12 to 15% in Tier 1 cities. According to them, paid campaigns are still below pre-COVID highs, but the management is confident of clocking healthy additions. In fact, the company is seeing ramping up its sales force, making employee expenses front-ended, which in turn has led to lower margins. But this is expected to improve forward as the workforce matures. Additionally, they're actively investing in its new product initiatives and new features within existing products, and they're also evaluating an integration with ONDC both as a buyer as well as a seller side app. So overall, a positive growth outlook coming from the management of Just Dial, visible green shoots of a turnaround, and that is the reason why Just Dial will be in focus today.
Well, thank you, Amakshi, for all those details coming in from Nuvama Institutional Equities on Just Dial. Moving on now, north-based cement companies would remain in focus, and this is because Ambuja and its subsidiary ACC have shut down 2 plants in Himachal Pradesh. Now, this is according to media reports. Now, what is the reason behind this shutdown? Because there have been some disputes ongoing between the management and the transport committee, and this is because of the fact that the transportation cost in the state is very high. In fact, 2 to 3 times higher compared to the normal surface freight rates. Now, this is also according to Nuvama Institutional Equities. Now, the management has urged the transport unions to implement the rates approved by the state transport body, but there has been some dispute, and hence the company has shut down both its plants in Himachal Pradesh. Now, if you see the combined clinker capacity of both these plants are close to 8 million tons per annum, which is nearly 57% of Ambuja's consolidated capacity in the North India and nearly 19% of the total clinker capacity of the company. In cement terms, if you see, the affected capacity are around 34% of Ambuja's capacity and 5% of industry's capacity in North India. Now, what will be the impact of this? Firstly, definitely there will be a production loss for Ambuja in the 3rd quarter because of this shutdown, and for peers, if you see, it could mean incremental volumes for them and in higher prices also because of supply shortage in the north region. Now, listed peers that have a higher capacity in North India include the likes of Shree Cement, JK Cement and JK Lakshmi Cement. However, if the freight rates come down for Ambuja in this region, it will be a long-term positive for the company and will also reiterate the Adani Group's aim to further rationalize the legacy cost that Ambuja has.
Okay. Thank you so much for that, Somit. That was all about cement companies, but we cannot not talk about Reliance Retail's foray and launch of its, the FMCG brand that they have spoken about. Now, finally, yes, in the AGM, they'd spoken about entering and foraying into the FMCG brand. Yesterday, what they did was launch the FMCG brand under the brand name Independence in Gujarat. Now, it will develop Gujarat as a go-to strategy is what the state to create excellence in execution in FMCG brands is what the company highlighted. And obviously, in terms of categories that they've entered into biscuits, packaged food, edible oil, packaged data, basin, that's gram flour, as well as grains and sugar as well. So obviously, how does this compete and who will be bearing the brunt in the FMCG space will be Adani Wilmar, Patanjali Foods, which do have a good exposure in edible oils as well as in the atta space as well. Tata Consumers, the Sampann portfolio, quite similar to that portfolio as well. So yes, they will be in focus as well. Lower risk side, you have ITC, HUL, Marico, given that, they're more diversified and not much more in those spaces that Reliance Retail's FMCG brand is in. And obviously smaller regional players, that unorganized players, they will surely be seeing an impact coming in as well. Now, let's not forget, Reliance's FMCG play in August, they've recently just acquired Campa Cola as well as Socio as well, and they have a presence. Reliance Retail already has a presence in various categories in the FMCG space, whether it's staples or personal care segment, home care segment. They're already there in those categories, so they do have that leverage coming in as well. And do not forget, the balance sheet of the company is quite strong. So furthermore acquisitions of the company could take place as well. Now, Nomura believes this is just one of the few many steps that will be taking place in the FMCG space for Reliance Retail. And obviously, they expect Reliance Retail to leverage its tie-up with WhatsApp to enable sales for its branded product across WhatsApp significant users as well. And plus, they're quite integrated with JioMart as well. So that's the update that we're watching out for in terms of Reliance Retail and the FMCG brand launch summit.
Well, Vinny, along with this, we also need to keep an eye out for Tata Motors and Dr. Reddy specifically, because the Sensex rigid adjustment date is today, which means that the flows or the mutual funds who have to change their shift their portfolio, these changes will happen in trade today. Now, the effective date of these changes would be December 19th, but today is the adjustment date, and exclusion from the Sensex is of Dr. Reddy's, while Tata Motors will be included. Now, because of this exclusion, the weightage of Dr. Reddy's will be going out, that is 0.8%, while Tata Motors is expected to have a weightage of close to 1%. Now, what could be the flows for Tata Motors? Brokerages are expecting the flows to be to the tune of close to $135 million, which is nearly 2.4 times its average daily volume. While for Dr. Reddy's, there could be an outflow to the tune of around $100 million, which is nearly 4.7 times its average daily volume. Along with this, there could be some minor outflows in Reliance Industries, Infosys, TCS and ICICI Bank as well, because the weightages in the Sensex will be coming down, and that's the reason there could be some minor outflows, but won't be much of an impact for these companies, because compared to their average daily volumes, it's a very small portion of outflow that is been expected by brokerages. So do keep an eye out for these stocks in trade as well. Now, along with this, two other stocks from gas space, GAIL and Petronet LNG. Now, those stocks will also remain in focus, and the reason behind this is the fact that GAIL's 5MT Dabhol LNG terminal is expected to begin operations throughout the year from May 2023. Now, this is according to media reports. Now, L&T is said to have completed the construction work, allowing now LNG tankers to take berth at the terminals even during monsoon. Now, earlier, if you remember, during monsoon period, the Dabhol terminal was kept shut. In fact, since January 2013, when the terminal has become operational, it has been operating only for the 6 months, and for the monsoon period, it was always kept shut. But from now, May 2023, Dabhol terminal will become operational for 365 days. Now, what this means? This means that the terminal's capacity now will get enhanced by around 2.5 MT, and this will potentially divert GAIL's US volume from Petronet's Dahej terminal to this Dabhol terminal. Now, this could be a potential volume loss for Petronet. Now, though Petronet has take out pay guarantees from GAIL, but enforcing the same and receiving the amount has been an issue for Petronet in the past. So, do keep an eye out for Petronet and GAIL, because these two stocks will remain in focus.
Okay, that's the stocks that we're keeping an eye out on, but Drone Acharya's IPO is in focus as well on the investors' radar. Yes, it's the SME IPO has overshot its subscription targets. Let's go across to Sharad, who's standing by to give us details on that. Sharad?
Well, yes, a very strong set of numbers coming in the SME space, and do remember that this company is a very small company, but it deals with drone, and analysts are stating that it's the first mover advantage for the stock as well. And of course, the subscription numbers have closed, but there are records which have been broken. I'd like to point out these records for you. The first one being this is the highest oversubscribed SME IPO in the BSE SME index, and that's a very interesting thing. And this is the highest number of retail applicants have also come in, going up almost 3.5 lakh numbers of the total retail investors. Apart from this, more than 100 crore shares have come as a demand. Now let's look at the gigantic oversubscription numbers, and this has been subscribed 262 times. And of course, do remember that the entire subscription amount garnered is more than 6,000 odd crore rupees. Now let's look at the categories. For HNI, it's almost 389 times. For QIBs, it's 46 times. And for the retail, it's more than 300 times. So numbers are very huge. But let's look at the entire fundraise of what it is all about. So it's almost 34 crores of total fundraise via fresh issue of shares. The price band is, of course, between 52 to 54 rupees. But do remember, it's an SME IPO, so the lot size is very higher. Apart from this, the funds will be used for, of course, acquiring drones and accessories and general corporate expenses. And recently, the company had a pre-seed funding round where they raised $4.5 million, and that also is a record. Why? Because this is the highest amount of increase has been there for the drone tech startups. That is also important, and it's also backed by ace investor Shankar Sharma.
But the big question that's on the mind of investors going into 2023 will be, are markets going to go up or down or stay muted? Now, this is Credit Suisse outlook for the coming year.
In December 23, so 12 months from now, the 12-month forward EPS will be 15% higher. And that, in my view, more or less sets the ceiling for what we should expect as the market returns. Because our view on global market PE, which is the middle piece and the heftier piece, is actually quite conservative, in the sense that we don't think risk-free rates are going to come down to the extent where they were between 2011 and 19. And we also don't think that the equity risk premium can come down further. It's already quite low. And given all the risks to global growth, all the risks to because of geopolitics, the ERP is going to be higher as well. So global market PE will remain flat to down. India's PE premium, the likelihood of it going up is muted, and there's a very big risk it could fall. And therefore, you're only relying on 12 months.
Well, the government of India has announced that bi-monthly changes on when it comes to the windfall taxes. Now, do remember, every 15 days these changes come in. Now, for crude oil, if you see, the taxes have come down to $1,700 of 1,700 rupees from 4,900 rupees that was the earlier. When it comes to ATF, it has come down to 1.5 rupees from earlier 5 rupees rate. On diesel, it has come down to 3.5 from 6.5, and petrol continues to remain exempt under the windfall tax regime currently.
Okay, that's the update coming in on the windfall taxes. But on that note, we are absolutely out of time on this edition of Market Cafe. SGX Nifty indicating a bit of a red start for the Indian markets. Goodbye from Somat, myself, as well as the team who put this show together. Don't go anywhere. The markets will take the action forward.